So once these cars and trucks leave the North American International Auto Show and eventually hit the lots, which are going to sell? Let's ask Mike Jackson, the CEO of AutoNation, which is the largest U.S. car retailer. Good to see you again in Detroit.
Great to be here, good to see you.
So what are some of your impressions of the show in terms of what's really hitting and will resonate with customers when they eventually get introduced later this year?
Well, I'm happy to say that overall the car industry is a bright spot in the U.S. economy. We had a record year last year of 14,500,000 in the recovery period, a record year, and we're forecasting mid-15 million this year. And a big part of what's driving that business is exciting new products from all the manufacturers. Great design, unprecedented quality, tremendous innovation. So it's good times in the car business.
So it looks like everyone is poised to at least add to their balance sheet. There's nobody that's going to miss.
If you're asleep for a minute, you're going to fall behind. The consumer has more choice than ever. And what we are able to say to the consumer today is, though, you can have the same size vehicle, same speed, but we can give you 20 to 25% improvement in fuel efficiency. And not with just talking about hybrids and electric, but traditional drivetrains that have direct injection, turbocharging, 8-9-speed automatic transmissions, and the consumer just loves that they can have it all.
Do you think the momentum we saw will continue not just this year, but beyond? Are we going to go back to auto sales of 17 million units? Or are we in this sweet spot where people were driving those old cars, so they're going to replace them this year and continue that process and then hold on to them for a while again?
So I think it's going to be mid-15 million sales for the industry this year. And ultimately we'll get to 16 million, whether that'll happen in 2014 or not, it's a little early to say. And whether we get all the way back to 17 million, I don't know, we'll have to see. But the industry is very successful and very profitable at these volume levels, and you couldn't say that in the past. In the past, the industry needed to sell 16 million units just to break even. So it's really good times in our industry.
A lot of the automakers have done a lot of work at leveling out their inventories as the year closed. Do you think that we'll see fewer incentives in 2013, that they won't have to incentivize as much?
I expect about the same level. You know, we had extreme incentives in 05, 06, 07, which I actually argued against, and very high inventories, and the inventories today are probably 30 to 40% less than what they were back then. And when you have so much inventory, you can't really produce to what the consumer wants because it takes so long to sell through what's already been produced, so it's massively inefficient. And then you just use price to bridge the gap. But if the consumer doesn't get what they really want, even if you gave them a big discount, they're not really satisfied. So this is a much better approach. Appropriate tactical incentives, but lean inventories where you can react to what the consumer wants.
Is the consumer able to act? We do now have higher taxes, and perhaps higher taxes still to come, depending on what happens in Washington. The consumer balance sheet is improved, but is there a wild card? Is there a risk with consumer spending or the economy, which, as we know, is not growing as fast as anyone would like to see?
No, I'm actually pretty optimistic. If there was ever going to be a hesitation on the consumer's part around the situation in Washington, D.C., we would have seen it in December with the fiscal cliff, because that was going to be a dramatic, immediate impact on their pocketbook if we went over to fiscal cliff. And December started strong, stayed strong, and closed strong. So I think the consumer is sort of looking at Washington, D.C. as political theater, false brinksmanship, and at the end of the day, there's always going to be a deal. So they're sort of saying, you know, we're going to move on with our lives. We're not going to be paralyzed and transfixed by what's going on in Washington. So autos is a bright spot. Housing is a bright spot now. The worst is over in housing.
New
homes should be over 1 million this year after 5-6 years at 400,000. So that'll be good for pickup truck sales. Energy is a big bright spot for the U.S. economy. That's good for pickup truck sales. So you put it all together, and at least for this next step back to mid-15 million, I'm very optimistic we're going to make it.
What are you not optimistic about? What would be the one thing that worries you? It can't all be perfect, because if it is, we would be in nirvana. We're not there quite yet, right?
Well, it's about as perfect as it can get, quite frankly. I think the consumer is going to ignore The debt ceiling drama, that's far more abstract than the fiscal cliff, and if that didn't distract them, then they should get through the debt ceiling. Europe seems to have been stabilized. The Germans have basically committed to bridge the situation in Europe, so it would take something completely new at this point, in my view, to throw this market off stride. Now, if they shut down the government for 6 weeks, that could get interesting, but I really don't think that's going to happen.
All right, Mike Jackson, AutoNation, good to talk to you once again.
Good to talk to you.
Thanks so
Thank
much.
you.
I'm Rhonda Schaffler. This is Reuters.